Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I'm going to share with you 4 different companies that some of you have asked me to look into recently. And today we're going to look at in-depth level of kind of analysis. So normally I like to give you just a kind of quick overview, but we'll look a little bit more detailed in terms of these companies' growth side of things, in terms of their earnings growth, in terms of revenue growth, in terms of free cash flow, dividends, and all of those things. And the 4 companies are really I own 1 out of the 4, and the 3 of them I used to own them back in the days, and I'll explain why I sold them and why I might be interested to get back into the companies. But before we do that, can you give the video a like, because it genuinely helps a lot. Okay, thank you. Right, yesterday I did a video and I shared with you guys that I added £400 and we made a couple of buys yesterday, and then I've added the rest of that money, so it's about £33 left of the £400 that we added yesterday. We're getting there. Okay, right now 6,500 is basically what we need to add in the next few weeks, so nothing too big. The one company I was hoping to basically will come down quite a bit is this company, automatic data processing, and I was planning to add to more of this company, but it hasn't. But we'll see how it goes. So next week, what is going to happen is basically some of the banks reported their earnings yesterday. It was mixed. Okay, and the next few weeks, next 3 to 4 weeks, you might see the market being a little bit volatile, because obviously we're expecting the interest rates, we're expecting the earnings. If the earnings are not doing well, then what normally tends to happen is if companies come out and say, okay, everything is doom and gloom, then the markets take that as the world is about to end, and the markets will come down quite a bit. So it will be interesting to see. I mean, I had a conversation 2 days ago. I had a conversation with a couple of my friends, and one of my close friends actually added me to this group that do like investors, for example, right? I don't know if I can call them investors. I'll be honest with you, they're very much speculators. So there's this huge group of WhatsApp people. He added me to this group, and they have been sharing like information about like some penny stock companies, this and that, and I just ignore them because I love my friend, and he's just like, you know what, he's very like-minded people, you might learn something from them, blah blah. I said, you know what, add me to it, but I'm not going to pay any attention, I'm not going to contribute. But I've been watching what they're talking about, and it was just like disheartening. I saw it yesterday. They shared a video from some TikTok guy that was talking about Nancy Pelosi, the House Speaker in the US, selling all her stocks. And for that reason, she knows something that we don't, and we should all sell our stocks. I'm like, is this really how we invest these days? We just listen to the news and just follow like a sheep, like wherever Nancy Pelosi goes, we go. Yeah, just to be careful, brothers and sisters. Wallahi al-Azim, there's so many people there that do not want you to succeed, inshallah. Just do the, boring vanilla dividend, whatever you are into. Do that for the long term. Don't buy stock today and sell it tomorrow, whatever, okay? But yeah, so just don't worry about the markets. Like I said, I'm waiting hopefully this company to come down quite a bit so I can add to it. But the rest of the companies, I bought a little bit of UK companies yesterday. I bought a little bit more of some of the companies that were undervalued in my portfolio, including Public Storage and so on. I'll be sharing with video about the overview of the portfolio. I haven't sold anything. I don't think I will be selling anything anytime soon. I was thinking about a couple of companies, but you know what? It is what it is. I'm going to keep it. And some of you, just quickly talk about this. Some of you asked me recently, when should you sell stock? I talked about this video a while back in my on my channel called When to Sell Stock. And if you're interested, have a look at that video, okay? But right now, as you can see, Merck, I'm up almost 60%. Am I selling it? Absolutely no. I thought about recently taking basically some profit off the table. But to be honest with you, if I want to hold this for another 5 to 10 years, why would I want to sell it now and then get back into it when it's more expensive? Makes absolutely no sense. Anyway, let's talk about these 4 companies that we're going to talk about today. Like I said, these are companies a lot of the value investors like Pfizer, for example. Pfizer has been around for quite some time. It's one of the biggest companies in pharmaceutical companies out there, and it has been trading quite high recently. So I've sold it, and because the COVID vaccine kind of changed their revenue up way higher, and then there were decline of revenue for the next couple of years, I took some profit off the table at the time. But if it comes back down to the values that I expect hopefully will come back down to, then I will definitely be adding again this to my portfolio, either this portfolio or to the family portfolio. But I'm sure you know the company in terms of vaccines. They are one of the top companies out there. They were one of the companies that saved the world, if you think about it, during COVID times. They're currently trading $47 per share. They have an EPS of $5, $272 billion market cap. They have a wide economic moat. Beta is very low. And this is why a lot of investors like this company. It's a huge company. It has a very low beta and pays a solid dividend, okay, growing dividends as well. PE is quite low. Forward PE is very low. Price to free cash flow is even lower. But when you look at the health sector, we're looking about almost a 25, but PE is about 19, about 9. Okay, annual dividend of 3.4%. This is sleep well at night stocks that what we're talking about today. Okay, latest increase was 3%, so 5-year growth rate is only 5%, and they have increased this for 11 years in a row now. Payout ratio is only 24%, which is absolutely amazing. Safety is 75%, and look at this, $23 billion of free cash. So that's the cash they can reinvest in the business, cash that they can actually buy back some of their shares, they pay as a dividend, okay, buy back their own stock, all of these things that basically amazing that they can pay off any debt that they have and so on. Profit margin and operating margin, return on equity is absolutely amazing. Total return in the last 10 years, we're looking at about 9%, and current ratio is actually above 1, which is quite nice. Right, so the next year they're expecting earnings to decline, obviously because of COVID vaccine is actually now it's not going to make as much profit as it did before, because the world does not need it, and hopefully we will never need it again. Okay, but then again after that it's expected about 1% growth. So before we move on, let me show you what the earnings are basically in terms of other companies. Let me go to earnings, for example, and I'll show you the estimates for the next few years. So EPS is expected, obviously 2022, it's about 26% because of that COVID. So 19 analysts looked at this. So we're going to look at up to all the way to 2026, because about 12 analysts looked at that. 25% decline, 12%. Then is going to be a bit positive. And then it's going to be negative again 2026, and then so on. So the earnings are kind of up and down in terms of EPS. In terms of revenue side of things, about 23%, then it's about 23% decline, 10%, 1%, 1%, and then so on. So it's still all over the place, but when you look at it from 100 billion, 77, 60, so it's declining a little bit and then kind of bouncing back. And a lot of that is not just to do with the company being a horrible company, is a lot to do with the COVID vaccine, okay? And that's something you need to bear in mind going forward. If you were to invest in this company, you know the growth will be all over the place. But a lot, like I said at the beginning, a lot of these companies are what value investors invest in, because they know they're going to hold it for 10 years, and in 10 years the company will be fine, and they will have a growing dividends because they do have the cash to pay off that dividend, okay? Right now, fair value from Simply Wall Street actually is saying $82, which is quite high, 41% from where it is right now. Fair value from Morningstar is actually about 48. Okay, there's about 1%. And then tip rank is actually saying 54. I believe it should be in mid 50s. I'll be honest with you. Okay, so mid 50s is where I expect, and those were basically Seeking Alpha and tip ranks are both saying the same thing. It is a buy according to Seeking Alpha. Now, in terms of Sharia compliant, this company has absolutely no issues. Okay, 100% from business side of it. Debt, interest bearing debt is actually quite good, and then the same goes for interest bearing securities. So that's the first company, Pfizer. Okay, and just quickly show you if we go back in terms of revenue and earnings, right? So revenue, you can see it's growing, and then 2020 basically is expected when they report it soon. Okay, that final the final quarter, okay, the fourth quarter, you would expect a high massive jump, and then obviously that decline that we saw already. Okay, and then same goes for the EPS. So just to kind of show you where both of them are. Right, so the next company we're looking at is Kimberly-Clark. So a lot of their revenue, this company, comes from personal care, and the basically comes from tissue products and so on. So they are one of the best when it comes to. They also sell obviously kids things, the Huggies and pull-ups and so on. If you've got children, and I'm sure you know, Kleenex is one of their basically famous in, if you like, tissue product and so on. Currently trading $136 per share. I used to own this company as well. I sold it a while back because it was just too expensive and it wasn't coming down, and I bought it at the time. It was very expensive, so as soon as I broke even, I took the money out and reinvested that into something else. So if it ever comes back down to the price, and I'll show you at the end, right, I would definitely be getting, because this is again another sleep well at night kind of company. Okay, I might not add it to this portfolio. I might add it to the family portfolio and see how it goes. EPS is $5.27, $46 billion market cap. So it's not huge company. It has a narrow economic moat, and the beta is actually quite very, very low. That's what I meant. Sleep well at night. You don't have to worry about if the market goes down 20%. This company doesn't go down as much. PE is quite expensive. Forward PE is expensive, and price to free cash flow expensive. So from just looking at this, it looks like it is expensive. I forgot to do that bit there. Dividend yield, we're looking at about 3.4. Latest was 2%. Okay, payout, they pay you $4.60 for basically per share that you own. 5-year growth rate looking about 4%. Dividend growth streak of 49 years. So they will be dividend king very soon. Payout is very, very high right now. But the thing is, dividend safety is fine, 88. So they have enough cash to cover that dividend. But the payout is just getting ridiculous. And I think that's one of the reasons I got out of it recently. So it will be a nice one to kind of basically watch how it goes in the next couple of quarters, couple of years. And then in the long run, I'm not saying I'm going to add it to my portfolio in next week or so, but it will be interesting to add it to the portfolio maybe in a couple of years down the line. Okay, profit margin is not that great. Okay, operating margins is decent. Return on equity is fine. Total return basically in the last 10 years, we're looking at about 8%. Okay, current ratio just below 1. So that means the next 12 months they might not have enough cash, but like we've always said, to enough assets to liquidate, okay, to pay off that debt. But obviously they have a bit of a free cash flow that they can use. Growth estimates the next 5 years. Next year is expected 13% and then 7%. So this is really interesting, okay? But from dividend side of it, it's not great. But from growth side of it, it's actually fine. I'm not sure what happened to the price here. Anyway, we've already seen it's $136, I think. Fair value, basically we're expecting $166 per share, according to Simply Wall Street. 17 or 18% undervalued at the moment, according to Morningstar, which I actually prefer, is 128, 6% premium. If it gets to 120, I will be looking at this company again. Okay, I'll be honest with you. And then price target will for tip rank is actually slightly $125 per share, but right now it's 7% downside. Same goes for Seeking Alpha, and Seeking Alpha is actually saying it's a hold. In terms of Sharia compliance side of things, we're looking at about 100% business side of it, 22 interest-bearing debt, and 0.95 interest-bearing securities. So that's another company. So if you look at their growth in terms of where they're heading right now, so they have been for the last basically year, they haven't actually increased it in terms of their revenue much. Okay, but then this year coming, it will be slightly higher, and then the year after as well. EPS, if we take the estimates, okay, you can see it has declined a little bit, but now it's actually coming back again for the next year. So it seems basically a decent company to add to your portfolio if you're looking for that dividend, if you're looking for the growth, as well as obviously looking for sleep well at night. This is one of the companies I would love to add this company today if it was actually cheap enough, right? They don't actually just take the garbage. They own a lot of places with landfills, and basically that they take all your garbage and basically recycle it. So they are also the leading recycler in North America. It offers collection services, including picking up and transporting waste and recyclable materials from where it was generated to a transfer station. And then obviously they do what they need to do with it. Great company, business-wise is perfect because it's one of those predictable businesses, if you like. $154 per share, 5.38 EPS, 64 billion market cap. It has a wide economic moat, and it definitely has a lower beta, which is quite nice. PE is quite low. is quite high, and forward PE is quite basically high at the same time. Free cash flow, price to free cash flow is high, but when we look at the industrials, we're looking about 20 PE, but right now it seems very expensive in comparison to that. Dividend yield 1.82, latest increase was 8%, annual payouts of $2.80, 5-year growth rate is 7%, dividend growth rate is 18 years, payout ratio we're looking about 45%, which is actually nice. Safety 74%, $1.98 billion of free cash flow, 11% in terms of operating profit margins, 17% of operating margins, 31% of return on equity, almost 18% total return in the last 10 years, which is absolutely amazing. And current ratio is just below 1, which is not that I wouldn't worry too much about. Okay, 7% growth expected next year in terms of earnings, and then 12% the year, basically the next 5 years. $154 per share right now, 136 where it should be. So it's overvalued according to Morningstar, according to Simply Wall Street, and according to TipRank, and basically seems little bit undervalued, maybe 12% upside. If you bought this stock right now, average price for Seeking Alpha is 171. That's about 11%, and they are saying it's a buy. So those, the last two actually are being bullish on the company. 100% in terms of the business side of it, 21% in terms of interest-bearing debt, which is a little bit high. Hopefully they can bring that down. Interest-bearing security is almost non-existent. And look at their revenue from basically 2020, 2022. Basically, we're expecting about 19.74, then $20.85 billion. So it is definitely heading in the right directions. There was a slight decline in 2020. I'm sure it's a lot to do with COVID. But when you look at the annualized EPS and you just look at the growth, 2020 was the only time they had a decline. It actually came back in 2021. And obviously now the estimates are basically 2022 and 2023 is actually heading in the right directions. Okay, so there you have it. That's and the third company. The final one is the one that I own. That is Air Product and Chemicals. This is by far one of the best companies I've invested in. They actually is really performing well. The only thing I don't like about it is the fact that they don't have enough cash flow. But apart that covers, they have enough to cover the dividend, so I'm okay with it. So it became one of the leading industrial gas suppliers globally, with operations in 50 countries and 19,000 employees. The company is the leading supplier of hydrogen and helium and so on in the world, and that is one of the reasons I actually invest in this company. They don't just basically deal with it, just basically the customers. Their customers is some of the biggest companies in the world. Currently trading $311 per share, EPS about $10, and 69 billion market cap. It has a narrow economic moat. Beta is very, very low. PE, and when you look at the PE and forward PE and price to free cash flow, it seems very, very expensive. But the dividend side of it, okay, 2%. Latest increase, okay, has been 8%. Annualized payout is basically $6.48. So every share that of this company that you own, that's what you will get. 5-year growth rate 11%, dividend growth in 40 years, payout ratio 61% and 95% safety. $303 million in the bank to pay off that dividend. 17%, 18%, and 16% respectively in terms of profit margin, operating margins, and return on equity. And 15% return in the last 10 years, which is quite nice. Current ratio is way above 1, which is nice. Next year, they're expecting 10% growth. Next 5 years, 11% growth. $311 where it is right now. According to Simply Wall Street, they're expecting this company is actually undervalued 57%. They expect the price to be 730, which is absolutely huge. But Morningstar is saying it's about 4% discounted right now, and I agree with that. Okay, with a margin of safety, okay, that should be about fairly valued right now. 322, 3% when it comes to tip rank, 325, 4% upside when you look at the Seeking Alpha, and it's a buy. And I think I agree with the latest. These guys have always been bullish on this company. I am not sure what they see, but hey, it will be amazing if it gets to $700 per share. In terms of business, it's fine, 16% in terms of the interest-bearing debt and 6%. Honestly, this is by far one of my favorite companies out there. I genuinely like the company. I like the business model. I'll show you how much I own and how much I'm up in a second. But when we look at the revenue for the next couple of years, right now it's been growing every single year, even during COVID time. Right now it's about basically, 12.7, 13.33, and then 14.0 is 8. Okay, so it's heading in the right directions in terms of that. If we look at the annualized EPS, are also grow in the right directions, and when you look at the analysts, they have actually beaten every single year, and hopefully will continue to beat that. Dividend seems basically safe enough for me. 95% is very, very safe. So that is the company, that last one I want to talk about. And there you have it, a product and chemicals. I own 15 shares. Okay, still according to still obviously fairly valued. I'm up £881 right now, or 30% if you like. And definitely will love to own more of this company. Is one of my biggest, I think it might be second biggest, there you go, second biggest holdings. And it just, because I was buying it when it was really undervalued, it's kept going up. Just like Merck, for example, I've been buying it when it was undervalued, so it kept going up and up and up. And I get, I think dividend wise, just $17 for basically every quarter. So as you can see, I haven't actually added to this company for a very, very long time. So $17, £17, and £16 or £17, all okay, £10. So it is basically growing that dividend as well, which is quite nice. So these are, sleep well at night companies that will not give you any headache. You will give you that dividend, but obviously the growth side of it, you just have to basically, if you are 10-20 years long-term investor basically, then obviously you don't have to worry about what might happen next year or year after in the markets. Sorry to making the video a little bit longer, but have a wonderful day. Assalamu Alaikum.